Okay. Let's make sure this tweet went out. Yep. Hello, hello. While we're waiting, for those of you who are new, there are a lot of new people. Wow, first times on Periscope. That's great. Hit this follow me, so you get notifications when I broadcast if you're new to my channel. So while we're waiting, I actually don't have that much to discuss today. Very thin notes on the Fed today. I was like all prepared for a ton of stuff to talk about, but I don't have that much, which is good. So we can get through this very quickly because I do have some important things to discuss, just not that much of it. So I always like that. Okay, I think we have a Nike. Okay. So I think we have a good amount of stuff here. I guess we could say all bets are off here with regard to new stuff to discuss. I'm going to try and get through this as quickly as possible. I think we have enough people in here that we could begin. So first, I'd like to apologize. I have a bit of a cold, so if I sound terrible, that's why. It's a very early stages of it too, so I'm trying to battle through it. So if I sneeze or if I sound a little Kermit the Froggy, you know why. All right, so there's some good stuff to discuss. So today was a Fed day, although you might not know it from the very benign response to the market. Now, I have to tell you, what amazed me was really how there was nothing much in this Fed statement. I'll go through my notes. First of all, they didn't raise rates. I don't think they're ever going to raise rates in a non-press conference meeting at this point, so you could kind of just chill until that comes. They talked about some inflation concerns. There was a little bit of a language change. They said that inflation will rise to 2%. I don't know if they just wanted to put in different wording because they're tired of writing the same thing. They are still far below that, though, and we've spent so much time below the 2% mark. I'm thinking that there could be an opportunity for the Fed to maybe let it run a little hot. We've heard in the past that they've said that before. I want to go into my chart because there was a day in particular. I always call this the Yellen come to Jesus moment, where she talked about symmetry in the market. I haven't really heard her discuss that again, but damn, that's really annoying. I can't. Oh no, I'm on the Facebook chart. That's why I'm not seeing it. Shiri me, although we will discuss Facebook in a moment, although it is pulling back here after hours. That's always the risk when something runs into the print. So her come to Jesus moment was on 4-12, so we're coming up on the anniversary of that. No, I'm sorry, that is incorrect. It was on 3/29, so yes, we are still coming up on that day. That day, she changed my mind. I was starting to get very bearish, actually, on the market, but as Chair Yellen often does, she basically said, I'm sorry. They had raised interest rates, and the market didn't like it, and it went kaplooey. They hiked rates into a growth slowdown, which is always the recipe for the gong show. And boy, did she get gonged. Anyway, the market had been in recovery mode, and I was looking for a short in the market, and after I heard her spiel, her shtick, I, speaking a little Yiddish here, I flipped, and I decided that it was back to being a buy the dips moment with regard to the market. It was very choppy. There was really non-committal, but I ultimately believed we would resolve higher because she talked about a few things. One, basically she said, I'm sorry, I'm never going to do it again. She talked about symmetry in terms of meaning that growth and inflation had been so low for so long that they're willing to let it overcorrect to spend more time on the other side. Like if you think of an even sheet of paper, like an 8.5 by 11 sheet of paper, and if you fold it in half and you draw like a line, you've spent so much time below the break that she's willing to let us spend more time above the break to make up for the time. So that's what she meant when she was talking about symmetry, and that was very revolutionary to the Fed language at the time. She had not used that language before, and that flipped me back to being bullish. So what does that mean for us now? We've gone through a couple of big liquidation breaks in the market, Brexit and Trump and all this stuff, and I had said both of those instances were buys, and if you missed those, you pretty much have missed a lot of the move in the market. Coming back to Yellen today. Today was a really, I guess, ideal opportunity, according to TV reporters, and I'm going to address this in a moment, for her to have gotten more hawkish in her language. Now, I was a little concerned that they might do that, but they didn't. They were actually rather dovish today, and I'll go through why I think they did that. The Philly Fed number a couple of weeks ago was strong. That means that things are picking up, and the manufacturing, the ISM today was good. In particular, some of the investment components and the employment component. So things are on an upward trajectory. There were some revisions down, but they were rather minor. So I think what the Fed is really saying is going back to that statement that they're willing to let things heat up a little bit. They're afraid of another false dawn. The first quarter has been like grim death for the market and for growth the last 3 years. And I think the Fed is worried that, the sun is out, but they're afraid that the rain clouds could be back on the horizon soon. We saw a little bit of that in the miss in the GDP growth a week ago. So I think that number spooked the Fed a little bit, and I think where they may have wanted to get a little hawkish, they sat on their hands for a little bit. So I think they want to see some more data, which I still think is fairly prudent. I was very proud of the Fed today. So what did they say? They say that they see a little bit of a pickup in inflation. I have to go back through the full minutes, by the way. I didn't have a chance to read the entire minutes. They took away some of the energy tough talk, saying that energy has been a drag on growth because energy has been up a lot. And it's above the marginal production cost for producers. So that to me means less credit risk. When you start seeing that get below the production costs, below like the mid 40s, then you got to start you got to start putting on your scary time hats. They talked about increased in recent quarters. I think that I don't know what that means. I wrote a note and I don't know what it means. I think that they mean that they are expecting to see inflation go up in coming quarters. They talked about the consumer being strong and a bit of a boost in business sentiment. That was strengthening, but they also talked about the weakness in business investment, which has been a big problem for the Fed for a long time. And I think it's been rather underplayed by the media. This has been the big cause, in my view, for the Trump rally, by the way. And just follow me for a moment. A lot of people don't understand why the market is up on Trump. A lot of people don't like him ideologically. Maybe they don't like his haircut. They just don't like him. So they don't look at the policy. If you strip away all the talk and you just look at the policy itself, what it boils down to is this. And this is, to me, why we have the rally, and this is why the market is where it is right now. He's talking about lowering corporate taxes. He was on a obscure Christian network, which of course I caught. I catch everything I don't know how I do it, but I always seem to catch these weird things. And besides being asked a couple of questions about God, he was asked by the reporter when is tax reform going to come, and he said he expects the framework, the structure for it, to be on his desk in the first 100 days. So that's still going forward. Tax reform. We have the highest corporate tax rate in the entire world. It's going to be cut significantly. very good for corporate earnings, immediate boost to growth. Repatriation. All you hear about is these big tech companies with tons and billions of dollars, maybe even trillions of dollars overseas, and the government is going to, one, get a rake off of that. For those of you who are poker players, the house gets a little bit of a rake. And you're going to have all this money coming back in, and I don't think Trump is going to allow these companies to just bring it in and buy back stock and dividends. I think it's going to be speculated on if they want to do that, they pay a bit of a higher repatriation fee, and if they want to use it and earmark that money to invest in property, plant, and equipment, which goes to this very Fed concern, the business investment, or if they want to hire American workers, that to me is going to be a big boost in these economic numbers. So that's number two. Also, having a business-friendly environment is going to be, in general, promoting entrepreneurship and not, demonizing success, I think will be a big move for the psyche of business. And lastly, there's a couple of other ones that are very critical, in my view, to the success of the rally going forward, and that is the stripping out of regulations. I had written down a few in my notes here that I had wanted to mention, which I can't find, so I may have to just do it off the top of my head, which really isn't that big of a deal. But first and foremost, Obamacare, that is going to probably be amended in a big way. The Volcker rule may come out. That probably will be taking care of. The Durbin amendments will probably come out. The living wills may be adjusted. CFPB could be adjusted. You may have just a lot of deregulation. That's an immediate boost to growth and into some very big sectors of the market. So that is why you're seeing this levitation in the market. It's always about growth, and in this case, interest rates. So the Fed is going to stay cool for longer, cooler for longer, lower for longer, cooler for longer. I thought that they were talking a little tough about doing 3 rate hikes this year. I don't see that happening. I think that they might do 2, which I think would be healthy. If they have to do 3, if we're talking about an increase in growth, it's possible. I think that they've waited this long. I think the risk of to the downside, the asymmetrical risk to deflation is always there. To cool inflation is very hard. To cool inflation, is very easy. You just raise interest rates. To stop deflation is a lot harder because you have to not only drop rates, you have to do QE. It starts getting more and more expensive, particularly the longer they wait. They've waited this long, they might as well wait a little bit longer. So that's my scoop at that. So that is the macro environment that we are in. I don't know if there are any more questions. If you have some, just type them. I will do my best to answer them. If not, we can move on to my market view and some momentum stocks. So I'm not seeing anyone type anything. So I guess that means we're ready to roll, right? We're ready to move on. So how do we trade it? Someone asked, it's a bit more dovish than I would have liked. Well, it doesn't matter really what you like. It just matters what they do. I have a lot of people who are very ideological, who follow me or who I talk to, and it doesn't really matter what you like or what you don't like. We have to trade the market that we're given, and they were more dovish, so we have to trade that. So let's talk about the major market indices first, and then we'll get into the momentum names. So there's a couple of things I noticed with regard to the S&P. One was you've had the last 3 days have been look below and fails with regard to the Fed day high. In the ES, the key number for me is 2272.5. Today we had a third look below and fail, and we closed above. Today's range did a couple of things. One I liked, and two I didn't like. one, I like that it had a higher low than the prior day, and I like that the body of today's candle closed above yesterday's body. What I didn't like is that we kind of opened up strong, sold off, and then didn't close that strong, and we had taken out at one point the 2-day range to the upside, but we fell back into that range. So that to me is a little bit concerning. So how do we trade? Also, I'm curious to see this low of day. The gap up low of day was 228.51, and the high of day was 228.59. So we had to look into that range that rejected. I mean, I guess you could say that the gap sort of filled. I don't think a lot of people would look at it that way, but I view it as sort of we had a bit of a gap fill today. It wasn't a full fill, but we did look into that range and then did reject a bit lower. So what do I always say? I always say that Fed day ranges, and we have a fairly narrow one of the most narrow we've had in a long time, become playable against the extremes, meaning a move above the high is a buy stop long for a move higher, and a move below the low is a short for a move lower. I've thought for a while we're due for a 50 MA test. I still think that at some point we will get that. I just don't know. I can't tell you what the order of operations necessarily is. The 50 MA now is almost at 225, which I've said for a while is the kind of the open the door for the bears. If you start getting pins moves below 225, to me start becoming really problematic. And I do think that at the very least the first touch of the 50 MA is an absolute screaming buy. So how would I trade this tomorrow? If we get above today's high tomorrow, just simple long. If you get below the low of day, short. And then if you get below the 3-day low, which is 226.32, you can add to the short for a move to the 50 MA. I'd probably cover either all of it or half at the 50 MA at the least, and then roll my stop down. Meaning, if I have a stop at a certain point, I would probably put it. I'd move it down. A lower wherever. I'd watch the market. I'd see where important bounce points are, and I'd look for a swing high somewhere in the intraday area, and then I'd just put a stop above it. So that's how I would be trading SPY. What has SPY been doing? I often find this very helpful to ask. What is the market trying? What is it doing? What is it trying to do? And how good of a job it is doing there? One of my buddies, actually, I guess former buddies at this point, used to use this logic, and I've adopted it a little bit. I've contributed the Fed day range, by the way. That's my creation. So the market, in my view, is trying to pull back. It's not doing a really great job of it, and the kind of the momentum. Like if you watch these days, these move downs, they're like pulling effing teeth. You have these mixed breaths or very kind of mild internals, and there's really no follow through. That has been the case on all of the pullbacks in the rally, for over a year now. When you've seen the moves down, other than like kind of the bigger plunges, and before moves higher, you've had these like really mild dribbling moments. So until I start seeing that character change, and I did start to see that a little bit on Monday with the gap down, then I would start getting concerned. So now you have a 3-day range. Like I said, today I would like to be either long above today's high, short below the low, with an add below the 3-day range. So that's how SPY is being played. I think it's just consolidating and spending. It's kind of correcting more by time than by price. Remember, I said we hit the channel high, right? This was back on 12/13, and I said it was a good opportunity to book profits, but I didn't know if it would be a good short. I thought it would be a very frustrating short with a lot of chop back and forth, and it sure has been. I have, however, put on some put protection, and I did that originally. I forget what the original one was, either March or April. Let me look at what I have on now. Let's see, go into one of these accounts. It was originally in February options, And on the decline yesterday, I think a little on Friday, but on yesterday, I used the opportunity to roll them into April. I still left on the February overwrite, and I added on a March overwrite. So it's now long the 225, 220 put spread with an overwrite in April, with an overwrite in March 211s, and also the February overwrite with a stop. So the roll cost nothing. We got more time, and we still have on a short play, which can be protection if there is some kind of a sudden move lower, which always could happen. Obviously, we all remember back to, we've talked about levels. 210, 211 was like a big deal level. It's also very close to kind of the gap fill of the entire rally, which I think would be, I mean, if we came down that hard and that fast, it would probably be a buy anyway. So I'm not really that worried. Famous last words, of course, but I'm really not that worried about that level. And if more time goes by and those options erode, I'd probably roll the 211s up to like 215, 216. Those are Fibonacci retracements of the entire run. I think that's actually the 61.8, if I recall properly. I don't know why that's not on my chart. I must have deleted it. So that's that. That's one way to play either a cheap play for a short or for a hedge against longs. Let's roll that beautiful bean footage and get into some of the technicals of the market. So Apple, I said, was someone had asked me, I said I'd rather play it post-print, but I did want to play it with a small call spread for earnings because of a couple of things. One, I did a poll on the sentiment for Apple. Usually it comes back, everyone's really bullish on Apple for earnings, but this one did not come back that way. It came back with people being very bearish, so that told me that people weren't positioned for a move up, and there was room to higher levels. And that wound up being a move to the upside. We've all seen this video of this guy who was bet his entire life on the short of the thing, the YOLO schmo. That to me also, I hate to say it, was a screaming tell that the stock was going higher. Someone said, oh, it's fake. I don't think it was fake. I watched the video. The guy broke his phone. So if you're doing a fake video, you're going to slam your phone down and break it? I don't know. I think it was pretty real. I'll tell you, that to me looked fairly real. So that to me, by the way, when you try to force the market to pay you, it just doesn't work that way. If you read Reminiscences of a Stock Operator, by the way, which is, by the way, my Bible, there's a great part where they talk about this fur coat that they're trying to make the market pay for. This, to me, was like the exact same situation. And to me, it was almost like I wanted to just tell the guy it's going higher, reverse your trade. But it didn't really work out that way. So I'm glad that that did work out. A couple of things with regard to Apple now. So we don't care about what Apple did today. We care about what it's going to do tomorrow, right? Because today is over. It's we're past 4 o'clock. So a couple of things. Apple is up a lot from the move lower, and it's into some important resistance levels. It did have a look above, and it did close above the channel high today. I'm going to go over this in the weekend review video, but we got very close to the full gap fill around 130.75. I suppose that there is room to the old all-time high. Maybe it even goes through it. But for me, at this point, I'd probably be a little cautious. I think that you can use today's range as a gauge. What I'd love to see is a couple of days where it kind of just holds this level and then takes it. So like if there was like some sideways move, that would be more interesting to me. So I guess you could buy stop it above the 130.49, so 130 half. Or I like it short below the low of day, which was 127.01. I think it would probably be looking to maybe pin near the 125, or maybe even we would get the full gap fill. We'll have to see. So today's range to me is key. I like it. Like if tomorrow we're below that range, I'd probably take a right or right out short. I'd do it in, could either do it in put spreads or just outright short the stock and then use the high a day as a stop. If you, again, a couple of days of consolidation and then rip through the high, you could even take it, I mean, if you want to go row tomorrow. Anything above the high, though, probably will eke up a little bit higher to the old all-time high. We're kind of close enough, so it seems like we might be heading in that direction. It may just ride the channel here. But as far as I'm concerned, kind of the easier money in Apple has been made. I think, I haven't seen what it was, but there was supposedly a headline, if someone wants to type what it was, that wound up rolling Apple down a little, knocked it down toward the end of the day. And it did wind up closing with a bit of a topping tail, which I'm always, you know, a little cautious about. I think it rolled on some headlines. I'm just looking at my feed. It says Apple rolls on headlines, says trader. I don't know what the hell that means, but whatever it is, the headline was there. So that's Apple. And by the way, how to think about things in the future. Let's see, Google. Let's cover Google quickly because they reported, and I think there's a lot of confusion about what's going on with Google. This to me is almost an identical pattern of what happened on Google on 10/28 earnings. The stock had good earnings, went up a bit, and then it touched a resistance line, and then came down and probably could see the channel low, which would be probably close to the 200 MA, believe it or not. So if you're long or want to play long, I think you could do it here against the 50 MA, which is just below us. Like if it just stops here and reverses, the 50 MA to me would be your stop. But if you lose the 50 MA, I think it's going to get gassed down to the 200 MA. So that's my take on this. When stocks can't go higher on good numbers, they go lower. When stocks can't go lower on bad numbers, they go higher. It's sort of a Costanza type of situation. It means that all the bad news or the good news has already been baked into a situation. Google, by the way, had also run a lot into earnings. And when things run a lot into numbers, they tend to get a sell the news situation. That is a little bit of a concern for me with another one, which is the Facebook. Yes, it is at an all-time high here, but it came up from the bottom, meaning it had come down a lot and it already rallied a lot to get to where we are. I do think if we hold the gains tomorrow and for the next couple days, this could see 145, which is the 1.618 Fibonacci extension, and the old progression line. Remember, we talk about the progression line. If you are new to me, you're going to get schooled in the progression line. It's kind of the opposite of a regression line. It is the same as a regression line, but it's a progression line because it's going up. And anytime Facebook gets to that, it's like touching a electrified fence. It doesn't last long, and it usually winds up with the stock going significantly lower. I will totally do a full breakdown of the progression line because we haven't discussed it in a long time in Sunday's video, assuming I'm not too sick to even be understood. A couple of things that had concerned me, like I said about Facebook, that it had rallied back up, it had stopped at the backside of the old uptrend line, and then today was up into earnings. I think a lot of people had played this long. I would expect early tomorrow there may be some profit taking for people who played it long. So while I think that we may be looking for 145s, I don't know that we're not going to get a little bit of a pullback first. But their numbers to me looked pretty good. I need to hear the conference call. Obviously, I'm not going to be able to do that because I'm on here with you. My big concern with Facebook, and I mentioned this in many broadcasts of mine lately, is that the last time they reported, the reason the stock went down was because they lowered their growth forecast on new ad revenues. And that to me is a big effing change from what we've heard from Facebook in the past. Meanwhile, they creamed the top line and the bottom line. The earnings report was phenomenal. I'm a little bit cautious though. I want to hear what they have to say about that. It sounds to me, I took some notes down on what some of the comments Sheryl Sandberg made. She talked about strong user growth. They basically have the same user growth in a month that Twitter has in a year. Impressive. Businesses are starting to use it more and more to advertise with the sponsored type of ads, and then they do the boost on the video for product launches, an announcement. Then they talked about Instagram stories taking some share. So that to me tells me that Snapchat might be coming public with peak user growth, and after some kind of an initial move up, this could be like Twitter 2.0. Very cautious on Snapchat, and we will discuss that when that comes public. I want to see what that deal looks like. There's going to be the same effing setup that we do in every one of these IPOs. They come public. They tend to have some kind of a pullback. Once they get through the IPO high of day, we double the range for the move higher, and then we never look back. If you did that in Twilio, you were caking money. If you didn't, and you got queued, I heard all these people telling me it's going to 100. They were all begging for the thing to just like have like, you know, a baby up day now. This was the same story in GoPro. It was the same story in all of these stocks that come public, these IPOs. Anyway, with regard to Facebook, it's starting to make some lower highs. I'm just looking at the after hours chart, and some lower lows in the after hours. So 135.35 was the last swing low. The prior bar was 136. I'd get a little cautious if it gets below 136, and I'd probably use a stop out below 135.35 at this point. If you get back up above the overnight high of the after hours spike high of 137.99, I would say it's probably going to be on autopilot to 145. So that's my take. Be a little leery early. I want to give this thing a little time to breathe because I know people were long. This was what happens a lot with Facebook. It has the pop. They don't realize that it's come up a lot already, and then there's some type of profit taking. But unless I hear again that the growth is slowing, and I have to go back through that conference call, I'm going to assume 145s are probably eventually in play. So that's my thinking on the Facebook. That's why I had been very cautious with Facebook recently. I did talk about a couple of quick long trades in there, but for the whole, I have not been on the Facebook bandwagon for a little while. It really doesn't matter because we were talking about selling this thing at 128 and 130. It had gotten to 133, and here you're just 6 points above. And guess what? You've sat out so much pain on the downside. To me, it really doesn't make a difference. To me, it's all about the story. Microsoft, MSFT, also ran a lot. Let me go back into that 9 month. Let's look at this one in a 9 month. Yeah, this one again, the same nonsense. This is the exact same setup I had said about. It was a pop and flop. It went up big. It had already run a lot. The thing was up huge, and then they sold the bejesus out of it to take profits. This thing will probably see the 50 MA, where it probably is a buy for a bounce. When stocks make all-time highs, that to me was a classic, and I think I said it the day of. I was leery, and I may have even said this in the weekend video. I have to go back and look. That it to me could have been an exhaustion gap, and it is. The stock, it probably has peaked for a while here. So Microsoft, I'd probably be a short the rips type of a situation with, of course, with a stop loss. I don't necessarily want to chase the short, but I would be into maybe shorting a bounce. I mean, if this thing comes back down to the reference lows and then bounces up to 64s and stalls there, I mean, you could have a head and shoulders situation. So I think Microsoft may have topped for a little bit. And my concern is that could be the case again with the same thing that happened in Apple today. I don't know that. And I think people were less bullish into Apple, so it may have a few days up here. But that's my concern, and that's the same concern I have again with the Facebook. So that is Microsoft. So yeah, I'm not so keen on Softy right here. Amazon, they report soon. My big beef with Amazon is the same kind of a thing here. It hit the channel high. We talked about that the other day. I hate a few things about Amazon. One is that it's already back up to the old highs pre-earnings. It's done it pretty straight line-ish with like a couple of consolidations. It's doing one of those, now. And I hate that everyone is so bullish on Amazon. That being said, the stock will probably be up on earnings. It'll probably go to 885. I would love, and when did they report? They report on 2/2, so we don't have much of an opportunity here for a shake and bake situation. Yeah, I mean, I'll tell you this: you have a big hammer day here. 816.38 was the low. and the high was 833.50. So I like playing against that range. Today was, this is all 10-day MA holding. Like I said, I like the idea of booking some profits if you've been long. I excruciatingly detailed how to have been trading this. I'm, for the most part, done with this trade. But I do think that this stock probably will see a little bit higher on their earnings number. That to me is what the pattern is looking like. It's a bullish pattern. If there is a drop, it may be quite dramatic. So I'd be watching this after hours. I'd be using either shares to neutralize deltas in either direction, however you're playing, and I would probably play it half size, considering it's run up a lot. I mean, listen. If you want to roll the dice with some of the profits we made on the break of the 50 MA, fine, be my guest. I mean, this thing was a killing, right? But yeah, the pattern still looks kind of bullish. Under Armour, this is interesting. I put on 2 trades yesterday. One was with Under Armour, and one was with Teva Pharmaceuticals. They both got 61.8s, and they're both reacting to those 61.8s a little bit differently. Teva to me is the textbook. I love when I buy a stock and it gaps up big the next day. It always makes me feel like I'm doing the right thing, right? So Under Armour. Here's a curious case, and this has to deal with experience. I had been short puts in Under Armour for a little while, and yesterday, before the close, I said I was closing them because the pattern looked bearish to me. I said a bit bearish, but what I really meant to say was it looked really bearish. I don't know why I didn't say that. I thought I had typed really bearish, but I wrote a bit bearish. I didn't short it, which was I'm killing myself for not doing that. I mean, this to me seemed like, really, honestly, this was like a textbook short. I actually had, you know why? Because I had forgotten that they reported yesterday, and a buddy of mine reminded me, and it was sort of really near the bell, and I was more, I think, focused on closing out that position because I didn't want to get monkey hammered than I was thinking about actually making. I was sort of in the mindset of don't lose money. I think if I would have seen this setup earlier in the day, which was a huge bad on my part because I should have noticed this, and maybe I have too many positions on and too many different names. That's probably the cause of that, and that's usually the cause of a lot of problems. But I looked at this pattern and I said, no way, Jose. I bought back those puts, and they were actually not even that expensive, which made me even more nervous about it. I was like, I actually, if the puts would have been really jacked, I would have been like, all right, I'll ride it through because they're probably, there's a lot of fear on them, but they weren't even that jacked, and I was like, this thing is going to get slammed, and boy, did it get slammed. But it now is down on 2 gap downs into the channel low, the trend line, and the 61.8 fib. Now I like it. So I bought, I did a risk reversal. I'll tell you exactly what I have on. Let's not even BS each other here. Let's talk about the exact trade, if I could find it. Yep, I have too many symbols on. I already see this in the account. This is a big problem. I bought the July 22.5, 27.5 call spread, and I sold the 17.5 puts to fund it. And I'm down a couple of shekels here on the trade. It's really nothing. This could be just a difference in the filler or a quick IV pop. It's basically flat. How will I trade it going forward? If we lose yesterday's low, which is 20.80, I'm going to stop loss. It's just going to be a stop out. If we get above that high, which is 22.16, I'm probably going to add to it. I may just do it with shares so that I can put a trailing stop on it and not have to worry about the options kung fu with that. Or maybe I'll just add to the play. I'll put the same play on I have now, and maybe I'll double up the size. But I didn't like how it traded today. I would have liked to have seen it a little bit stronger, but hey, it didn't break that low yet, so I'm still in the trade. So that's my story with Under Armour, and I'd probably be playing for the gap fill. I don't know about the second gap fill, but I might be playing for the first gap fill. Teva is another story. That thing got to my price target. I hated that it did it after hours, but it did it. 30.07, and it got a little below there. It undercut it into the 29s, but it opened. This is also, by the way, if you go back into my YouTube channel, my very first video that I ever did on Apple covered how to trade Teva, how to trade all of these on after hours when you're looking for how to buy. It made an RTH, regular trading hours low, higher than the after hours low, and then took out the first 15-minute high, and that's always a step on the gas buy. I loved that we had a gap and go above the 10-day MA. I love that we closed above the 20 MA today. And I'm hoping we get back to 38s, which is really where it broke down from. And it was an it would be a gap fill. So that's my play there. I'm hoping, I shouldn't say I'm hoping, but that's really where my goal is, to get to that gap fill. There may be some resistance. The 50 MA has been formidable. I might start scaling some of it at the 50 MA, which is currently 35.92. I think I'm going to see how it handles that. If it just punches through, I'll probably leave it on. If it doesn't, I don't know, maybe I'll raise my stop. How's that? I'll raise the stop on the play. But I love how that play is coming along. The play I have on in Teva is in June. I have on the 35-40 call spread, short 30 puts. So, yeah, this bad boy better perform for daddy. If we lose the low of day today, I'd probably be on quick, I'd be on guard. And if we lost yesterday's low of day, I'll be out of that. I actually, believe it or not, I think if we lose today's low of day, and if there's let's just say there's an early gap down tomorrow, and it doesn't recover it early, like let's say in the first hour or so of trade, I think I'll just stop out of it. If it gets above the high of day, I'm going to just trail the stop up, and I'll use today's low of day as the stop. So this is just how I think. These are the play, some new trades that we have. That when I say we, I mean me, that I have on. So that's the story with Teva and the story with Under Armour. So we covered two earnings plays. Although I don't think Teva was earnings. I think it was just news. But again, when something has come down all this way, when it has that big gap down on high volume right into my pocket, I'm there with the catcher's mitt to catch it. I covered Google already. Exxon, this is one that I'm really actually a little surprised with how much Exxon has come down. It's come down a hell of a lot, really, really fast. Today was actually, yesterday and today are actually a trend snap, believe it or not. But we're into the lower end of the range, of the recent range. Granted, it's from a bit of a lower high, but I think it's come down so far, so fast at this point. And we talked about a quick write or write out short play, actually. Now we're back into the lower end of range. I'm starting to think about long. And I like that we're starting to get big body candles sort of toward the end of a move. What's the volume doing? Today's volume was lower than the prior day, which is okay. There may be an undercut of range. The 61.8 of the entire range is 80.72. This 81 to 83 bracket, though, has been really, really critical support. Was really big resistance. It's been critical support. I think that even if there's an undercut of the range, we're getting to the point where it's time to start buying for Exxon. How will I do that? I don't know that I'm going to do it with shares, but I do know that I'm going to do it with short out of the money puts. And we'll discuss some of that when we actually start laying into those trades. But I think that starting to now sell out of the money premium is probably, we're favoring a more sustainable bounce maybe sooner. I think we're getting close to that. So any big, like if there's a big gap down or something like that, I'd probably be using that for a put sale. Tesla, I don't like that we came up from the bottom and had the trend break. Today actually closed back below trend a little bit, so I think you got to be a little careful here. I'd like to see this thing pull back or chop sideways longer into the earnings report. Just take out some of this froth here, give the MAs some time to catch up. I do think it could see higher. 265 would be good for me. I'd like to see that, but I don't know that we're not going to pull back. It's run a lot here. I think that the better play for this will be to, when do they report? 2:15. Oh, so we have time. We have time. We have 2 weeks. I'll revisit this when we get closer to it, because the dynamic here, like if I say I like it, which I do. I don't know that we're going to get a setup that is going to be good for earnings. So there's no way 2 weeks out I'm making a earnings call. What I will say trading-wise is if you take your little pointer and you draw a downtrend line from the 125 high and connect it to yesterday's high, hey, how's this for a right or right out trade? Long above the 3-day high, which would be above yesterday's high, 255.89 for a move to 265, and short below the low, below 247.70 for a move down to the 20 AMA, which is 240.85. That's the trade. I don't want to even outthink it. That is the deal for the Tesla, also known as Tesla, but when she's acting well, we call her Tesla, the Testmeister. Taser, not one I watch very often, although I do have a small long trade on in there. I should probably be watching this a little bit more closely. It's below the channel low. It's just chopping. Longer term, this is a bit of a longer term play for me. It's a bigger, longer term bull flag, but what I'm going to do now, and which is what I should have done sooner, is draw in a like a triangle here and put in a stop loss order below the triangle. I'll show this in the weekend review video, but I'd actually like this to go lower into earnings and then set up for a long. I think that this company, the body cams and stuff, is a thing, but I like to kind of do the opposite on this stock. This one trades a little wild. Let me see, actually. I haven't looked at this position in a while because it's really not very big anymore. But there is still a little bit on. How are we doing in there? We're doing okay. I'm short some puts. They report on 228, so it's a little bit of a while. So we're in a range. We have a hammer low at 23.48, and we have a range high at 25.59. I either want to buy or sell stop over it, meaning short below that low or a buy stop above the high for a move back up probably to the channel high, which is closer to like the 27s, where this thing really kind of broke down from the 27 exactly. So that's my scoop with that. Moving right along, Wynn, not one I follow that regularly, although I do keep an eye on it. Steve Wynn is, by the way, the best in the biz. This ran up again. I mentioned this the other day, actually, at the earnings. I didn't even watch it afterward, but I said 203 to 205. That range was a place to sell, and it's now, again, came back below. It's just a range trade. It was a trend snap, but now it's back below, and I would probably get interested again at this thing, maybe around the 50 MA. If we got to as low as the 50 MA, I'd probably sell some out of the money puts. I don't know that we're going to traverse the entire range, but this to me now is a look above and fail, and probably is going to come back down to the lower end of the range. It just is what it is. It ran into the number, which I never am a big fan of. Price line. Got above 1600. It's right on the trend of this move. So I'm just looking at the MA support. I would love to see this come down a little more. You know what the real key is for this? And I've noticed this for a while. This is a little trick I use. I look at how Expedia trades on their earnings, and then I do the opposite on price lines. So like if Expedia gets nailed on their earnings, Priceline usually gets nailed also, and then it's a buy for their earnings. If Expedia really runs on their earnings, then Priceline runs on their earnings, and it tends to be a short. I've just noticed this for a couple of years now. I don't have the exact scientific data on that, but it's stuck out in my mind for a while. So it's a Costanza based on Expedia, if that after the move of Expedia, if that makes sense. So that's what I like. Priceline, when do they report? They don't report for, another couple of weeks, so we're going to wait on that. I'd like to see Priceline pull back here. It's run a lot quickly into the range high. I don't know if we're going to get down to the range low, but 50 MA to me would be like if we snap the low of day today, today's low of day, you might want to do a quick play for the 50 MA. If you wait 50 MA, I'd probably be into selling near dated out of the money puts. Although the 100 MA actually to me looks a little bit more interesting. If there's a pullback to the 100 MA ahead of the number, I'd probably be playing that to some degree. Priceline win, we got through that. Nvidia, they haven't reported yet. Let me see. That was up a lot today, right? I think that this thing is destined for a pop-up. I don't know how sustainable it's going to be, but it seems like it wants to go. I'm pissed that it's running ahead of the number because it's going to make me have to adjust things and maybe my view here. But it seems like this wants to see the old all-time high. I think the old all-time... Listen, the stock had gotten really out of control. I don't think stocks peak when short sellers want them to. I was hoping for a pullback to the 50 MA to discuss, but this is now kind of popping out of the range. Anything above 111.92 to me looks bullish. Back below is a little bit iffy, so I think you could kind of use today's body as your guide. If you start losing 110s, it's probably, or 109, 110, it's probably a stop. Nike looks like poopy. Nike poopy. Yesterday, though, actually the pattern yesterday was pretty impressive. I didn't see how this closed yesterday. You now kind of have a secure low in, believe it or not. Wow, how did I miss this one? 51.48 is a key level. We stopped just shy of that. And the gap fill, I would have liked to have seen the full gap fill, but Nike could be a long over the 3-day high. It stopped today at the 10 and the 20. If you clear that tomorrow, I'm probably thinking maybe long the stock. Below today's low, I would say that the pattern is maybe invalidated, but this to me just looks like a hell of a lot of chop, and it's consolidating for a while. They were a gap and crap on their number. Where did we stop today? The high of day of the earnings was 53.35. Today's high of day was 53.26. So if we get back up above that number, I might try a call spread. We'll see. We haven't broken the downtrend yet, though, which has me thinking Nike's got some issues, and retail has just been a dog for a while. I think that the reason this probably went gap down was on Under Armour, but I think it probably rallied because people realized that Nike is back. They're taking back their share. My big beef with this, though, is that a lot of people are playing this long still. The dogs of the Dow theory and whatever. I've heard so many people tell me this. Just draw a trend line. Yesterday's low stopped on the trend to the tick. If you get below that, it's a stop out and a short. How's that? And I'll show this in the weekend review video. Let me see, I want to draw the upper, redraw as a channel. Yeah, we're in a channel, boy. We are in a channel. Boy, are we in a channel. We hit the low end of it, so it's probably, look to me, above the 3-day high I like long, below today's low I like short. Simple. Or as a stop if you don't want to short it, because it could be a frustrating short. I did NVIDIA already. What's this? Ulta Chalons. You know, it's funny. I was a big Ulta bull years ago, and I did really well with the stock, but I haven't been playing it for a while. I just wish I kind of bought it and didn't look at it again. But I thought this would be more of a fad than it's turned out to be. This is still caught inside of last earnings gap range. Got to the upper end of it, so I'm a little cautious. If this pulls back ahead of the print, then I might get a little bit more interesting. What I'd like to do, how's this, is, wow, it's a really big candle. Jeez. Where's the 200 MA? It's roughly around the low. So I don't want to play with this thing ahead of the number right where it is here. We're getting to the upper end of the range. It may keep going, but I can't say I have good trade. Couldn't say that I have new money, good trade location. If this got down to like the 200 MA ahead of the print, if there was some kind of a snap and it shook these people out, I might then be willing to try to take it long then. So that would coincide with the lower end of that candle's range. So yeah, that's my view on Ulta, if that makes sense. I think we covered about everything. If you missed this or you want to catch a rebroadcast, it's going to be on my YouTube channel shortly. That's Justin Pulitzer Trades. If you're not following me on Twitter, my handle is @JustinPulitzer. That's where I make the magic happen. I'm amazed I held up as well as I did, given that I'm feeling under the weather. Keep an eye on this Facebook. I'm going to be talking that up a little bit more tomorrow with how I want to maybe play that one. So that's my story. I'm sticking to it. The dollar. Oh, someone wants to know about the dollar. We could end on the dollar. How's that? So you have a Fed day. We're right on the 100 MA here. I think you could, if you're long, keep your long with a stop below yesterday's low or today's low. I would probably be interested in a buy stop above 100.06, which is today's high of day, the Fed day high of day. It would, to me, be a successful hold of the 100 MA, and I think it could bounce to as high as 102. Below the 2-day low, this could really get very slippery to trend and closer to the 97s, which is the 200 MA. So I either want to be long above today's high of day or short below the 2-day low. Simple. Start thinking like this, and you'll start getting to be into my process, and I'll tell you, it works a lot. Anyway, that's my story. I'm sticking to it. Have a great rest of your week, and hopefully, if I'm not on my deathbed on Sunday, we'll do a weekend review video. And even then, if I am, we'll probably do it anyway. All right. Have a great rest of the week. Cheers.